Okay, guys, welcome back to the channel for another live stream. As always, we have two topics to cover today. Two big news stories. We have updates on the Trump tariffs and kind of seeing how that affects the fashion industry. And also, we have an update on the Prada and Versace deal. So, how is everyone doing? I hope everyone is doing good. I hope everyone is doing well. We're streaming at normal times today. Yes, we are. Yes, we are. Yes, we are, guys. I'm trying to have a normal sleeping pattern, but we'll see how long that lasts. Probably 1 day or 2 days. We'll see though. um, but yeah, without further ado, let's jump straight into it because some massive news that dropped not that long ago, actually, less than a few hours ago, is that Prada has finally released the value figure that they are considering acquiring Versace for. Of course, they are to acquire Versace. I don't think everything has gone through yet. We'll read about it via BOF, which obviously is a great source when it comes to the business side of fashion. But as you can see here, Prada Group is going to acquire Versace for 1.25 billion euros, which is absolutely insane. They also plan to invest an additional 250 million euros in relaunching Versace, which has struggled to keep up with bigger heritage brands since selling to Michael Kors' parent, Capri Holdings, in 2018. And this is very interesting because I've seen a lot of the discourse online just really being around what is going to happen aesthetically to Versace. Is Versace going to follow in the footsteps of Prada? Because as most of you watching will know, Prada is one of the few, groups that has actually seen some significant financial gains over the past year when a lot of other luxury conglomerates have been struggling. Prada, Miu Miu, they've had amazing performance. So are they going to, take that same formula and try to turn Versace into this like Miu Miu-esque short skirts with ballet flat sort of aesthetic, or are they going to find a way, an interesting way to modernize what Versace has done for so long with the prints, different use of silk fabrics and stuff like that? So all of that needs to be seen because them saying that they need an additional 250 million euros to relaunch Versace, which to me is an insane investment. That is so much money. I'm very curious as to exactly what they are using that money for. Like, what is that money going towards? But let's read on. Prada Group has agreed to acquire Versace from Capri Holdings for 1.25 billion euros. The company said in a statement on Thursday, which is today, of course. Prada is borrowing an additional 250 million euros to invest in relaunching Versace, which turned loss-making last year as it struggles to keep up with bigger heritage brands amid a global downturn in luxury sales. And this is very interesting because, once again, I remember in the first stream that we did about this whole Prada and Versace thing, I said that it seems like a massive bargain for Versace to be bought for anything less than 2 billion, to be honest. 1.25 billion in theory seems like a bargain because of how big Versace is and how much revenue Versace makes. But considering how much of a loss they've made, also, that might be why they were able to negotiate a fair deal in terms of it being worth less than I would have thought Versace was worth, to be honest. Because normally they have these multiples where they take how much revenue you earn and they multiply it by a certain number of factors. That also depends on like the industry and how much growth potential is seen in that industry. But Versace makes close to like 1 billion in revenue. So it's not even a multiple of 2. It's not even a multiple of 1.5 in this case, which is what was surprising to me. But considering the losses, that might be a big reason why they aren't worth as much as they should be in a way. There might be something interesting here with the mumification of the garish, almost vulgar gaudiness of Versace as it becomes chic to mock elite wealth, doing it in an ironic way. That would, I guess, be very interesting. You would have to see, though. Why is Prada doing this? Versace is a brand that is affordable since you can get all of it for at least 50% off at the end of the season. Yeah, but that's not good for the company. That's good for the customer, but that's not necessarily good for the company because they're losing money by always having to have sales because things aren't selling. So I guess Prada just sees a lot of growth potential there, and they think that they have the expertise and the know-how to turn around their fortunes and make loads of money by fixing the issues that Versace has. But anyway, let's read on. The deal is going ahead despite a global market rout sparked by Trump's trade war, which obviously is something we're going to talk about later, which risks hammering demand for high-end products in addition to clouding the outlook for fashion's global supply chain. Shares in Michael Kors and Versace parent Capri tumbled 36% in a week before partially recovering Wednesday after Trump announced a 90-day pause on the heftiest tariff imports from all countries except China. In spite of a volatile market that is likely to pinch both strong brands like Prada and struggling rivals like Versace, Prada Group appears to have decided it couldn't pass up the chance to add one of Italy's most famous brands to its stable. Turning around Versace will be a challenge for the group controlled by Miuccia Prada and her husband, Patrizio Bertelli, but could provide a new avenue for growth beyond its flagship Prada brand and Miu Miu sister label, as well as helping to fend off consolidation by French groups LVMH and Kering. With its highly recognizable aesthetic, the brand constitutes a strongly complementary addition to Prada's group's portfolio and displays significant untapped growth, potential leveraging multiple value creation levers. And this is exactly what I was alluding to, this statement here, where I was saying, really, all it looks like is Prada just seeing that there's a massive growth potential there, and therefore understanding that so long as they can, do their business correctly, there's a lot of money to be made via Versace because they're doing that badly, to be honest. So yeah, it was bought by Capri for 2.2 billion. Now it's being sold. It's not being sold for 1.25 billion dollars, by the way. It's being sold for 1.25 billion euros. So let me see how. It's still a loss, but not as bad as it looks. So that's that account that is 1.38 billion dollars. So yeah, still a loss, but not exactly that much of a loss. But yeah, they didn't do well, and it was a horrible investment on their part for sure. For sure. And I think they'll talk about it here. Versace's estimated revenues fell 19% to $810 million. Yeah, so this is what I was talking about. So their yearly revenues are $810 million dollars, but they are selling to Prada Group for $1.38 billion. So that's not even a multiple of 2. That's quite insane. That is quite insane. But reading on, in the fiscal year through March, Capri said, that's roughly in line with the size of business when the American group acquired it for $2.1 billion in 2018. The brand is hoping to break even by March 2026 after operating margins swung to a high single-digit loss over the past year. I think them thinking that they can break even by March 2026 doesn't make much sense to me, to be fair. That seems like wishful thinking. Because, first of all, Prada Group has said that they're borrowing an extra 250 million euros just to launch it. So them breaking even would mean, first of all, they have to make up for the losses that the company is already making, and they need to recoup that 250 million initial investment that they're investing back. And they're saying by March 2026. In a year's time. That doesn't make any sense. I'm sorry. Companies don't recoup that amount of money that quickly. If they said in 2 or 3 years, I think that would make more sense. But yeah, hoping to break even by March 2026, that's some serious wishful thinking. That means that they think it's going to be a cash cow. They really think they're going to make tons and tons of money, but that doesn't make a lot of sense to me. But reading on, last month, Versace named a new artistic director hired from Prada's Miu Miu label, Dario Vitale, to help revamp its collections. We covered that in a previous stream. If you guys are interested, Vitale is a seasoned operator whose fresh creative vision could revive interest in a brand that's been designed by co-founder Donatella Versace since 1997. Also a very interesting point, because a reason why we are speculating whether the aesthetic of Versace will very much look like what we associate with Miu Miu is because Dario Vitale came from Miu Miu, and is one of the big reasons why Miu Miu had so much success and continues to have success in recent times. And so, considering that's his understanding of things, that's the aesthetic that he has seen work on a business level. Is he going to do that for Versace, or do they have a different plan? It's always fun to speculate, but let's read on. On the other hand, industry sources say the designer's exit from the Prada Group was fraught, and his appointment could raise concerns among executives that his Versace could cannibalize sales of fast-growing Miu Miu, that would only happen if his aesthetic is very similar to Miu Miu. But so long as it isn't similar, it wouldn't really cannibalize the sales of Miu Miu, to be honest. The deal will test recent efforts to financialize and professionalize Prada's governance and operations. Over the past 5 years, the Milan-based firm has sought to accelerate its succession plans, bringing in a new CEO, CFO, and deputy chairman as founders Prada and Bertelli relinquish their co-CEO titles. That also is happening because Mita Prada is slowly stepping down, and you can see that by a lot of decisions she's made recently. That was literally why Ras Simmons was hired. I remember around the time that Ras Simmons was a co-creative director of Prada, a lot of people were speculating that is this sort of Mita Prada's exit plan from fashion, where she's going to kind of set off into the sunset and stop designing and just kind of, relax a bit more. So we've always known that there was an understanding that over time they were going to bring new CEOs in, new CFOs in, new creative directors in, and that is kind of just happening. So that's nothing new. We kind of already knew that. Okay, I'm even looking at the article that I think they're alluding to that also. Let's see what they've said in the article. Star designer Ras Simmons joined the company as co-creative director of the Prada brand in 2020. The organization is ready and well positioned to write a new page in Versace's history, Bertelli said in a statement. Prada Group's sales have continued to grow despite a downturn in the overall luxury market. Revenues rose 15% to 5.4 billion euros last year, which is something I mentioned earlier. Expansion was driven principally by Miu Miu, whose retail sales have nearly doubled. At Capri, investors welcomed recent months' reports that the group aimed to shed its Versace and Jimmy Choo businesses in order to focus on turning around Michael Kors, after a plan to sell the group to Coach owner Tapestry fell through last year. That was also a big business story in fashion not too long ago, where, that sale was blocked, and it has really affected Capri's ability to do any meaningful business. And that's why also when this conversation around Prada acquiring Versace came in, a lot of people were speculating if that deal would be blocked, considering the favorable price also. So it's very interesting that that ended up not being blocked. But reading on, US antitrust authorities blocked the previous deal, saying it would hurt consumers by making the country's handbag market insufficiently competitive. Yeah, so they talked about that. Prada negotiated further discounts to Versace's price amid the current market rout at 1.25 billion euros. Capri is selling Versace for far less than the $2.1 billion it paid for the brand in 2018, but the opportunity to reduce its net debt of $1.12 billion, as well as getting a loss-making unit off its balance sheet, likely enticed the board to accept a deal. A very desperate deal, if I must say so myself. But they have to do what they have to do. In February, Fitch downgraded its rating for Capri's debt to BBB, just a notch above what would be considered junk bonds. So that's the story. That's kind of the update in terms of Prada Group acquiring Versace for 1.25 billion euros. Before we move on to the update on the Trump tariffs, I would like to know what you guys think. What do you guys think? Do you think that the aesthetic of Versace, considering that Dario Vitale is there, is going to be similar to Miu Miu? And do you think that will affect Miu Miu sales? I'm curious to know what your thoughts are. Miu Miu has been thinking about entering Prada into the Italian stock market for a long time. So I wonder if they are finally going to do it, and if that's part of the deal with Donatella. That might be part of it, to be honest. Now that you've raised that point, that definitely might be part of it, for sure. Because they talk about what Prada Group is trying to avoid is a takeover by an LVMH or by a Kering, because obviously they're way bigger. So they are trying to legitimize their business by acquiring other businesses, growing in that sense. And I guess entering the stock exchange will help with that, to be very honest. So that's definitely something I can see happening in the near future. I don't think Dario will change the Versace aesthetic to Miu Miu, but he will implement the Miu Miu playbook in how he will run the design studio. That's definitely a fair point. Definitely a fair point. Oh, Anglerfish is saying it's a pipe dream. I think you're talking about Prada saying that they are hoping to break even by March 2026. Yeah, I think it's wishful thinking. I think it would actually be sensational if they do. If they are able to pull that off and break even by March 2026, it means that Prada's business models need to be studied by every conglomerate in fashion, because they already have seen crazy economic growth at a time when other conglomerates have been struggling. So that would just mean that they just know what they're doing so well that they're doing things that other conglomerates have been struggling to do. So at that point, it's like, I can imagine what LVMH is going to do at that point. They're going to headhunt all the CEOs at all the Prada Group brands and offer them money that they can't refuse, so that they can, have a bit of that sauce. That's what always happens. All the massive companies just come in with millions. Like, we will hire you. We'll give you a $10 million bonus if you join LVMH. That literally is always what happens. I think Prada buying Versace is a good business decision. It will bring back Versace to Italian ownership. That perception alone is gold. Good point. Also, that's a very good point. What's the thing with all these Italian brands getting bought out? Valentino, Gucci, Versace, Bottega, Bulgari. Is it a conspiracy? I don't think so. I just think that a lot of them don't. They don't have the infrastructure to continue growing independently. And when they are owned by bigger companies like Capri Holdings or whatever, they aren't really a big focus, because Capri, we know that their main focus is Michael Kors and building Michael Kors' business. They don't really care too much about Versace, which is why they sold it at a price that really doesn't make a lot of sense, other than the fact that they just kind of wanted to recoup money to get rid of their debt. But apart from that, that's kind of been the main focus for them. So it's also the companies that acquire a lot of these Italian brands, they don't actually care too much about the brands. It's not the main focus of a lot of these companies. But yeah, all the other sales though happened a while ago. Like Gucci happened a while ago, Bottega. So all of this stuff is not like super, super recent. But yeah, guys. Anyway, that's the story on Versace and Prada. The next story, of course, the Trump trade and tariffs, and how does that affect businesses and fashion. So for guys that haven't been able to keep up, Trump has had a lot of controversy around the tariffs that he has implemented. And yesterday in the morning, Wednesday morning, he actually announced that there would be a 90-day grace period on the tariffs, which means that he essentially paused some of the crazy tariffs for certain countries. And what it meant is that all the markets went up, because the markets were really unsure about how this would affect the companies. Companies were in disarray. And with him pausing a lot of the tariffs and just having a flat fee, it now allows a lot of companies to have time to actually think about what they're going to do, where they're going to move production, who are they going to hire, does it make sense for them to produce in the US, does it make sense to produce elsewhere? And so as a result of that, a lot of the stocks went up. There is a lot of accusations against Trump around the fact that this could potentially be insider trading, because Trump told people literally now would be a good time to invest before he literally announced the 90-day period. So in a way, a lot of people have said, is this insider trading? Should Trump be under investigation for this? Because a lot of people that are Trump supporters did invest a lot of money and saw a 20% increase in their stocks immediately that this was announced. So that was crazy. As far as fashion, which is my main focus, I think that this is definitely a very good thing for fashion, because now brands actually have some time. It's not a long period of time, and I think this probably will be extended, because once again, and like I said in my initial stream, I didn't think that the way that Trump implemented the tariffs made any sense, because it was too fast. It didn't give any business any time to really think about what their strategy would be. Was too abrupt, and that's why we've now seen Trump walk back on them. I do think that there are some arguments as to why, like some valid arguments as to why Trump did it the way he did it. The most valid argument I've seen is that the reason why Trump made it so abrupt and why his formula didn't make any sense, which we'll get to, and why, this idea that they tariff us, so we're sending them tariffs back, and this whole thing, even though the calculations didn't make any sense, the reason why he did it that way is to force countries into negotiating a better deal. And so the actual point was not having the math be correct, because the math being correct doesn't mean anything when your ultimate goal is to just go into negotiations, so you negotiate a better deal. So if that's the case, if that's what Trump is doing, it makes half sense. But if that isn't what he's doing, then it's a whole mess, to be honest. But yeah, we'll see about the insider trading and see if he actually gets investigated. I don't think he will. I think that Trump is definitely above the law. We've definitely seen so many cases where I feel like Trump could do anything and be above the law, to be honest, at this point. So we'll see how that goes. It's 100% insider trading. A president, he is immune to fraud charges. Trump is above the law. Yes, he very much is. He's going to pardon himself. I think that any other president or former president that told people to raid the Capitol would never be allowed to become a president again. But like we say, Trump is above the law. So it's different. It came for the runway analysis, stay for the political analysis. I have to talk about politics because it affects the fashion industry. This is not a political channel, by the way, but I do talk about politics when it does affect fashion business, because that's this channel's main focus, fashion. So that's why I've been talking about Trump a lot recently, because he's been making a lot of decisions that affect us all, even those of us that work in the fashion industry. So that's why it's a big focus. But anyway, let's read the Financial Times article that really talks about the reasons why Trump, paused a lot of these tariffs and what that means for the markets and how that affected the markets in the short term. So let's read. Donald Trump on Wednesday announced a 90-day pause to the sweeping tariffs he unleashed on all major US trading partners last week, triggering immediate relief on Wall Street as he backed down from a policy that threatened to upend global trade. At the same time, Trump boosted tariffs on China to 125%, doubling down on his trade war with the world's second largest economy. Now, that was very interesting, because something that Trump said in his statement was that, when I announced these tariffs, loads of countries, in his words, came begging. They were begging, came begging to me for a trade deal and to negotiate terms. And the only country that didn't negotiate terms was China, because as some of you might know that are following, China actually gave the US their own tariffs, and they had some reciprocal hitbacks for the US, and Trump didn't like that. So of course he then put that insane tariff on China, like absolutely insane tariff on China. And that was the only thing that he did, and then everyone else kind of has the pause period. So we'll see how that affects a lot of companies that produce in China, especially in the short term. We'll see how that affects consumer goods, like things that people are buying day to day, how expensive that might become in like a month or so. That would be interesting to see, but let's read on. The pause on Trump's so-called reciprocal tariff scheme is the latest in a series of U-turns and reversals made by the US president in the chaotic trade policy rollout since his inauguration in January. So, the first section, which is why did Trump pause the tariffs? The breadth and size of US tariffs on its major trading partners triggered a global sell-off in equities and attracted rare criticism of Trump from Republican lawmakers on Capitol Hill. Now, this is very, very important to note because a lot of, and I talked about this in my last stream, something I hate about politics in general, I don't think any person should worship any politician. I don't think anyone should ultimately pick a side in the sense of this person is all good or this person is all good. Because from my understanding of just history, there are both sides that say like the Democrats and Republicans have a history of, you know, the slave trade and supporting the slave trade and racism and genocide. Both of them do. So no side is necessarily, you know, free of any sort of war crimes. No side is completely, you know, angelic and is, you know, amazing. And the worst thing is that a lot of people just like, if they're a Trump supporter, everything that Trump says is law and that's it. And if you're a Democrat, then everything that the Democratic side is saying is law. And I think when it comes to stuff like this, where everyone, you know, is affected by it, I definitely think that it's very telling that Republican supporters and Republican lawmakers are very against what Trump is doing because so many Republicans just are Republicans blindly, right? They're just like, whatever Trump says, we do. And it's so telling that even they are like, okay, let's slow down here. I think we need to think about the way that we are rolling out these policies. We need to think about the way that we are rolling out these tariffs. I think that's extremely telling. Super, super telling. But let's read on. Multiple billionaire financiers also slammed the levies, including some of the Republican Party's biggest backers. Explaining his decision on Wednesday, Trump referred to the global market rout, which had extended to a sell-off in the US Treasuries, and said people were getting yippy. You have to have flexibility, Trump told reporters. His decision broke as his top trade negotiator, Jameson Greer, was giving testimony to lawmakers on Capitol Hill. What the fuck? Who's in charge? Stephen Horsford, the Democratic lawmaker from Nevada, shouted at Greer moments after Trump announced the pause. The president of the United States is in charge, Greer replied. That's funny. So now this is which tariffs are left. Also, I'll tell you quickly, from a European standpoint and a UK standpoint. So for people that aren't following, once again, because I know some of you might not be that interested in this, but you should, because it's going to affect you. So in the EU and the UK, we were planning reciprocal tariffs. However, those have been paused because there is a 90-day pause period. So that also gives countries times to further, you know, put into place how exactly they are going to fight back with the tariffs that are inevitably going to supposedly be reenacted after 90 days, after the 90-day pause period. So if anything, that also leaves space for a lot of countries to have an even better retaliation because they have more time to think about it, especially in the EU, where a lot of countries have to come together and actually come up with these ideas and kind of what would be the best decision for all of the countries that are part of the EU. So it's all a mess. It's really, really all a mess. It's all a mess. It's really a mess. But reading on. The US now has a 10% baseline tariff on imports on all countries, including the EU, with exemptions for chips, copper, lumber, pharmaceuticals, billion energy, and minerals not found in the US. Autos and auto parts also dodged the 10% levy, but they remain subject to a separate 25% tariff introduced by Trump last month. So that was something that European countries did do to the US, where that one of their retaliatory tariffs was on the auto side of the US company. So you see the likes of Harley Davidson, their prices might go up a lot because a lot of their auto parts are made in the EU. And so therefore, if the EU puts crazy tariffs on the auto industry in the US, a lot of US automotive companies will be bleeding. They will be suffering. And that's the funny thing about these tariffs. You need to think, because a lot of people act like, Trump is putting these tariffs in and it's going to be a net positive for the US. And even if, and that's a big if, there's an overall net positive for the US, there will be certain industries that are affected more than others. So where some industries might, benefit, other industries will suffer. One of the big industries that will suffer is the automotive industry, first of all. The fashion industry is going to suffer, which is obviously my concern. So it's very funny that people act like all these tariffs are in a vacuum. Like if you work in a certain sector and these tariffs disproportionately affect the sector that you work in, you literally will be out of a job. Yes, you supporting these tariffs and acting like there's going to be some like weird net positive where every single person in the US is going to, benefit from these tariffs. That's not really how it works. That's just not how it works. But reading on, Mexico and Canada had avoided the worst reciprocal tariff regime, but Washington last month applied tariffs of 25% to all imports from its two neighbors that did not abide by the terms of their 2023 trade deal. The White House confirmed on Wednesday that the 25% tariff would remain in place. Levies of 25% on all steel and aluminium imports into the US will stay, and probes that could lead to tariffs on copper and lumber are continuing. So that's also very crazy. Of course, Trump has said that 70 countries are queuing up to strike agreements in Washington. And I think that is if you want to see it that way, that is the only potential silver lining, that the reason why Trump did this crazy stuff is because he wanted to force countries into negotiating a trade deal, and that's actually the main point. That's the only valid argument from all of this that I've ever seen. Every other argument that I've seen supporting the tariffs don't actually make a lot of sense, to be honest. Trump's tariffs are a distraction from his legal troubles and multiple indictments. His tariffs also divert attention from foreign policy failures, economic weaknesses, and other damaging headlines. Yeah, for sure. For sure, for sure. But something I also wanted to do, I wanted to react to a really good video that I saw on YouTube that really, really explains how the rollout of these tariffs have been and how nonsensical the whole thing is. So let's have a look at this video and I'll give my thoughts as we watch the video. So let's have a look, guys.
If you're only reading content that skews left or right, you may not know how the other side is interpreting the situation. This is where Ground has received zero coverage on the left, so you might use, which comes to about $5 a month. Ground News. President Trump refuses to let the United States be taken advantage of and believes that tariffs are necessary to ensure fair trade, protect American workers, and reduce the trade deficit. This is an emergency, it said. And so, because this is an emergency, Trump is, quote, invoking his authority under the International Emergency Economic Powers Act of 1977 to address the national emergency posed by the large and persistent trade deficit that's driven by the absence of reciprocity in our trade relationships and other harmful policies like currency manipulation and exorbitant value-added taxes perpetrated by other countries. Trump's going to impose.
Also, someone in the chat is saying, I'm scared manufacturing in the US is going to grow in prisons / black box type sites that abuse vulnerable workers. Yeah, that already happens though. So a lot of prisons in the US are privatized. And when things are privatized, obviously they're done for profit. And so that's why they call it like a prison industrial complex, right? A lot of companies actually invest in prisons, and prison workers work for certain corporations for less than minimum wage. And it's done legally because prisoners don't have rights, or at least the same rights that people that, aren't in prisons have. So this will definitely happen in the sense that, they will definitely move these into prisons, because a big reason, and she's going to talk about it in the video, I don't know where all of this money is going to come from. A lot of reasons why a lot of American businesses thrive is because they can go into China and they can go into Vietnam and they can pay people really, really cheap prices because the labor market is so much cheaper than the US. And if everything has to be forced back into the US, well, they can't take advantage of the cheap labor. So one loophole that they can take advantage of is the prisons. and get people in the prisons to do a lot of this work, right? So I definitely think this is something that we'll see more of if these tariffs are a long-term thing. That's definitely going to happen.
Impose a 10% tariff on all countries, and that took effect April 5th. Though certain individual countries will receive an individualized reciprocal higher tariff for those with which we have the largest trade deficits. During his press conference announcing the tariffs, he had a handy little chart, which I'll put on the screen for those watching. It laid out which countries are getting individualized treatment, including the percentage of tariffs that other countries charge us, and next to it, what the US will begin charging them starting this Wednesday, April 9th. The numbers are misleading, to say the least. For example, China is at the top of the list, with the graph indicating China charges the US 67% tariffs, and that the new US tariff on China will be 34%.
Obviously, this video is more talking about the initial things that happen. So obviously the tariff on China is a lot higher now. So that has to be mentioned.
Which makes it sound pretty reasonable, right? Like if China's adding 67% tariffs on all US goods, then 34% from the US is less than half what China is charging us. Frankly, it could be higher. It's not fair. The problem is that China literally does not charge 67% tariffs on US goods. The fine print under the heading on the chart that says tariffs charged to the USA, in case you can't read it, says including.
And this is where, once again, this is a very important point that she raised, where the understanding is that, oh, this is how much in tariffs they charge our country, so we're charging them this back. But it doesn't take into account, like the percentages don't take into account so many different factors that she will mention in this video. And that's why the formula and how they calculated the tariffs is completely nonsensical.
In currency manipulation and trade barriers. What does that mean? Well, we have pretty clearly defined categories of trade barriers. The U.S. Trade Representative in the Executive Office of the President issues a yearly report called the National Trade Estimate Report on Foreign Trade Barriers, laying out exactly what trade barriers exist in each country. They fall into 14 general categories that include things like import policies like tariffs, as well as technical barriers like restrictive and excessive regulations, government procurement like binational policies, inadequate intellectual property protections, overly regulated digital markets, market subsidies, anti-competitive practices, labor protection violations, harmful environmental practices, things that get in the way of free trade. These are things that all countries have to a certain extent, including the US, and knowing what barriers to trade exist in each country is a helpful tool for understanding trade with those countries, because it turns out each country is different and requires individualized economic policies, at least in theory. However, the problem is that what's written on Trump's pretty little graph is a lie. That percentage is not based, as the graph says, on tariffs, including currency manipulation.
Exactly. Because it's not based on tariffs. It's based on tariffs in addition to factors that Trump himself or his administration thinks affects the US economy. So that whole, this is what they charge us, and so we're charging that back, doesn't actually make any sense when you look into it, because that's not actually what a lot of those countries are charging the US.
Manipulation or trade barriers. That percentage is based largely on a fancy looking formula that emphasizes the size of the.
Oh no, not Trump's horrible formula. Not the terrible formula that we've been seeing everywhere. Oh no. This formula hurts my eyes at this point.
Trade deficit we have with each country. That's to say, the difference in how much we export to China versus how much we import from China, for example. So we import more than we export to that country. Therefore, there's a trade deficit with that country. And my God, look at Vietnam. Vietnam puts 90% tariffs on US.
Also, let me also explain something about like trade deficits and like import and export, like, which I think hasn't been talked about a lot when people have these conversations. So normally, if you import from a country more than you export, which means that, you know, in a sense, they benefit, let's say, according to what, if you look at it in a very weirdly normal way or simplistic way, they are benefiting more because we are importing more than we export to them. Therefore, we are giving them more money than we are getting from them. Well, the only reason why you would import more things from a country than you export is because they provide more valuable things that your country needs than the valuable things that you provide to them. So therefore, just charging tariffs doesn't change the fact that the reason in the first place why you imported from this country, more than you exported would be because they are providing more value to your country, which is why you need those goods from their country in the first place, more than they need goods from your country. That's what people actually have not been mentioning the whole time. So it's like, we need to balance the books. It's so dumb. That is so stupid. It's so silly. But anyway, let's continue watching.
US goods. So our new 46% tariffs are only half of what Vietnam charges for US goods. They could probably go even higher, except for the fact that that's not true. The 90% number includes our trade deficit with Vietnam. We import more from Vietnam than we export to Vietnam. And that's true. And when you pause for a second to rub your last remaining brain cells together, you can understand why. Vietnam has a lot of factories and a large workforce that works for pennies. And there's all sorts of human rights and other discussions we could have about that. But from a basic economic standpoint, Vietnam is able to undercut the global competition because it can produce things for dirt cheap or grow things in its insanely tropical climate that cannot be grown anywhere in the US. So we want those things because they're cheaper than the same things coming from elsewhere, or because we cannot make them ourselves. That's the basics of why people trade. On the other hand, US manufactured items have to comply with US laws about minimum wages and other restrictions. So anything manufactured here is going to be more expensive. Who the in Vietnam making 15 cents an hour is going to buy an American-made item? The demand for expensive American-made goods in Vietnam is very low. So when the demand is higher in the US and lower in Vietnam, we're going to import a hell of a lot more than we export to Vietnam. Slapping a 46% tariff on goods imported from Vietnam is not going to make the factory owners there think, wow, it would be so much easier and cheaper for me to move my factory to the US. Instead, they're going to mark up the price of their goods to cover the new tariff, and we will all pay more for those items here. Or they'll look at that list that he showed in his graph and say, the Philippines are pretty close to us and they provide cheap labor and they're only being charged 17% tariffs. So let's start moving our manufacturing there instead.
Exactly. Which is why this whole thing of like, oh, it's going to move all manufacturing to the US. Also, how big do people think the US is that global manufacturing is all just magically going to all move into the US? Like, I've heard a lot of people saying that this is going to bring all the production back to the US. Like, what? What? The US doesn't have that much space, you know? Like, what? People genuinely think that every single factory from Vietnam is going to magically reappear in the US. And then also, like she mentioned, of course, my focus is fashion, which is why I focus more on like factories and stuff. But even when it comes to agriculture, there are things that the US imports for cheap from Vietnam, like foods, that can't even be grown in a lot of parts of the US because the US doesn't have the correct vegetation to even grow those things in the first place. So you're not going to magically change the vegetation of the US and start growing those things in the US. Like, it just, the whole thing doesn't make any sense.
On top of that, basing these new retaliatory tariffs on the import and export of goods, of items, dramatically misses the full picture in many ways. But specifically, according to the New York Times, the United States is the world's largest exporter of services. Streaming services, media, technology, banking, tourism. None of these services fall into the trade deficit calculation because they're not goods. So the US imports more goods from the EU than it exports, but it exports more services than it purchases, according to the New York.
And once again, like she has gratefully pointed out, that's why the whole tariffs percentage thing and the formula doesn't make any sense. Because there are so many things that you're not accounting to that is still an export and an import, and actually is very important to the economy and how exactly your economy, like how you can balance the trade deficit with your economy. You have to look at things like the services that are exported or imported. Also, you can't just be like, oh, they charge this tariff on this specific good, so we're going to charge it back. Like, it doesn't make sense.
New York Times, quote, if you counted services in the trade gap in Mr. Trump's formula, the tariffs on the EU would shrink almost in half. And on top of that, there are certain countries with which the US has a trade surplus, meaning we export more than we buy from them. And according to Trump, that's supposed to be good. And yet there are at least 100.
Which is funny. So another thing about Trump's, I think she's going to mention it, but another funny thing about Trump's tariffs that didn't make sense is that, so if they are trying to balance the books, right? If there is a country where you export more than you import, therefore it's in your favor. you're making money from that because you are exporting more goods to that country than you are importing. So why do those countries have tariffs? That doesn't make sense, because if Trump is trying to balance the books, why would you increase tariffs in a country like that? That doesn't make much sense.
100 countries and territories with which we have a trade surplus, and they were all included in that blanket 10% tariff. They now have 10% tariffs, whether or not we are in a trade surplus with them. And when asked to explain how they got to these random tariff numbers, the US Office of Trade Representatives put out a document trying to make the formula seem fancy by using little Greek symbols. But the problem is that there are people in the world that have studied math and know what the symbols mean, and were able to look at the formula and call bullshit. Many have pointed out that a couple of the symbols mean literally nothing. The tariff rate is multiplied by two variables, one meant to approximate the quote price elasticity of import demand, and one to approximate the tariff pass through to retail prices. What does that mean? I don't know. I'm not an economist, but what I do know is the number approximating the price elasticity of import demand that they chose was 4, the number 4. And the number that
Sorry, I just realized I was actually muted. But basically, what I was responding to this, which is where you said that, you know, we do have space, is what's being done with it. Florida, Louisiana, Hawaii, PR all have tropical climates. So essentially, what I was saying is that you need to remember that these tariffs don't affect one industry, they affect all industries. So if we talk about fashion, for example, because if everything works out the way that Trump is thinking that it's going to work out, a lot of these companies will be forced to manufacture in the US. That's his whole thing. It's like, we're bringing manufacturing back to the US. All of these companies make all these products and it doesn't benefit US citizens. So you don't have the space for every industry. You have to pick and choose. So you might have the space for some stuff, but you don't have the space of all of the agriculture in Vietnam. So there's no way you're going to just uproot the whole agricultural industry in Vietnam and place it in the US. And even if you did that, then where's the space for all the other stuff, like all the manufacturing of the microchips and the manufacturing of clothing and the manufacturing of automotives? Where is the space for all of this stuff? If for you to have the space for all of this stuff, you'd have to basically I don't even know what you would have to do to have the space to have for every single industry. And then besides space, another thing that you also need to think about is expertise. Even if you have the space, everyone now has to be trained to make it to the same scale that is being made in all these different countries that are being tariffed. On top of that, you need to think of the labor cost. How exactly is the US going to make, you know, the production of a lot of these things profitable? Because a lot of things, like let's say production of bananas, the reason why it's profitable is because a lot of places where like bananas are cultivated have cheap labor markets. Places in Africa, in South America, these are where people, you know, produce a lot of bananas, right? How are you going to produce all these things in the US and it's profitable when labor costs are higher? They can't exploit workers the way that they do in all these other markets. So you have to think of it from all the different angles. You can't just, even if you have the space, there's so many other issues that you have to overcome for it to actually make sense, which is why, to me, it's very simplistic to be like, you know, we can just move everything to the US. It won't work out that way. It just won't.
That they chose to approximate the tariff pass through to retail prices was 0.25. So they take those two numbers and multiply them by the tariff rate. The problem is that 4 times 0.25 equals 1. So they're multiplying the tariff rate by 1. And what do you get when you multiply a number by 1? The same number. It does nothing. It is made up math to sound smart. And they're betting, based on accurate historical data, frankly, that their supporters.
Also, Anglerfish, exactly what you're saying, right? China made it their business to be the world's factory. It took time to build up infrastructure to that point. Factories and roads that grow like beans. Exactly. And just what Cam is saying, you can't match the production scale of Asia and the rest of the world overnight, especially because they have been building their infrastructure to manufacture all these things for decades. So how exactly, and this is why, going back to my amazing questions, right? I always say, how long is it going to take to build some of this infrastructure in the US? And how much is it going to cost to build this infrastructure in the US? And if they build this infrastructure in the US, who is going to pay for it? These three questions need to be answered. All three of them need to be answered. Also, Tarek saying, the underlying idea is to make the US less reliant and exploited by its trading partners and NATO allies. It's a good idea for trying to reposition a superpower on the down of capitalism. So yeah, that is the point, for the US to be less reliant. But the whole point of it being less reliant is by a loss of the manufacturing moving to the US, which is why I then end up posing all those questions, right? So that's where I wonder what the answers to those three questions are.
Won't know the difference. The problem is that 4 times 0.25 equals 1. So they're multiplying the tariff rate by 1. And what do you get when you multiply a number by 1? The same number. It does nothing. It is made up math to sound smart. And they're betting, based on accurate historical data, frankly, that their supporters won't know the difference. The formula that the White House used then, boiled down, was our total trade deficit with the country in dollars divided by the value of the goods in dollars that we import from the country. Why? I don't know. So, using an example reported on by MSNBC, we have a $66 billion trade deficit with South Korea, and we import $133 billion in goods from South Korea. 66 is 50.3% of 133. So, South Korea's tariff rate is listed as 50%. And then to get our new tariff on the country, they then just divided that number in half, because Trump thinks he's being nice by just charging half of what they charge us in these made-up tariffs. So the made-up formula is weirdly applied in a blanket manner to almost all countries, regardless of underlying factors and actual trade barriers that are important to consider when setting tariffs. But also there are exceptions put in place that complicate that and kind of don't make any sense either. For some reason, Afghanistan's tariff numbers were calculated using a different formula. China's tariff.
Good points he made once again, because first of all, there are exceptions, and I read it earlier in the Financial Times article. There are certain industries that have exceptions, and the tariffs don't take into account a lot of those exceptions, because the tariffs are looking at total imports and exports. And then also they're talking about balancing the trade deficit, but they're not looking at services exported and imported either. So it's a mess.
Tariff numbers are cumulative. So they amount to a total of 54% tariffs on China. So these new additional 50% tariffs Trump is threatening against China just today would put tariffs on Chinese goods at 104%. Steel and aluminum and cars are not included. Neither are copper, pharmaceuticals, semiconductors, lumber articles, bullion, and, quote, energy and other certain minerals that are not available in the United States. So it applies blanket tariffs where it doesn't make sense and exceptions where it weirdly complicates things. And get this, even the American Enterprise Institute, like ground zero for kooky right-wing economic think tank theories, was like, wait, this math is bad. They literally published a blog post titled, quote, President Trump's tariff formula makes no economic sense. It's also...
And this is what I was alluding to earlier. When you have people that literally normally, under normal circumstances, will always defend their political leanings, for them to look at the formula and say it makes no sense is insane. Is insane. President Trump's tariff formula makes no economic sense, and it's also based on an error. Crazy.
Also based on an error. That's the whole title. Because in addition to posting the formula that they used, the US Office of the Trade Representative also cited to their sources, and people then checked those citations. In the American Enterprise Institute post, the authors write, quote, even if one were to take the Trump administration's tariff formula seriously, it makes an error that inflates the tariffs assumed to be levied by foreign countries fourfold. Remember one of those numbers, 0.25, which when multiplied by 4 cancels itself out in the formula and doesn't make sense? That's in part because it was the wrong number. The number should have been closer to 1. 1, when multiplied by 4, equals 4. So the top number should have been divided by 4, not divided by 1, meaning the tariff rates are 4 times higher than they should be by the government's own reasoning. So Vietnam's rate of 46% should actually be 12.2%. As the American Enterprise Institute authors state, and I cannot believe I am quoting approvingly from that institution, quote, our view is that the formula the administration relied on has no foundation in either economic theory or trade law. But if we are going to pretend that it is a sound basis for U.S. trade policy, we should at least be allowed to expect that the relevant White House officials do their calculations carefully. Sick burn, and from a far-right extremist think tank, no less, proving officially once and for all that there is one hard line that conservatives do actually have when it comes to Trump's behavior. It's the economy, stupid. Not to say he hasn't messed with the economy before in detrimental ways, but this time he's gone so far that even people with the cognitive dissonance necessary to overlook his past actions are able to stop and say, hold the damn phone. So not only are the numbers a lie and the math faulty, the basis for these tariffs is completely illogical, not least of which because these aren't retaliatory tariffs, because to be retaliatory necessitates the existence of tariffs to retaliate against, and these tariff numbers are entirely made up. Here are 3 more reasons.
Exactly. Exactly. Like they can't be retaliatory tariffs if all the formulas are wrong and all the math is wrong, so therefore they're just random.
That's why these tariffs.
And also, if you're tariffing, like she mentioned earlier, if you're levying all these tariffs on countries where you actually export more to than you import, what is the retaliation there? You already have a positive trade deficit with that country. So why would you? There's nothing to retaliate against.
Make no sense. Number one, multiple of Trump's own cabinet members, not least of which is Commerce Secretary Howard Lutnick, have said that this is part of a long-term plan. And yet they are bragging that countries are coming to the negotiating table to work out a deal to lower or eliminate the tariffs. So are these tariffs long-term, or are they just bargaining chips? That uncertainty is roiling the global markets. On the one hand, Trump is promising that these tariffs will bring back manufacturing jobs to the US. And on the other hand, they're being touted as simply how Trump makes a deal to make countries pay more. But if the countries do come to the table, like he says they are, and they do make a deal to pay us more in exchange for lower tariffs, for example, that means that those markets will open back up and these tariffs will be short-lived. Getting companies to move manufacturing back to the US isn't something that happens in a couple weeks or months. It takes multiple years and tons of money to relocate a factory.
Also, something that I've been fascinated by when I was thinking about this whole thing, right? Because obviously the infrastructure to build, if you're trying to build the kind of manufacturing infrastructure that they have in certain Asian countries that's so advanced, way more advanced than a lot of the infrastructure that we have in the West. First of all, it's so funny because, first of all, the people that have the expertise to even build this kind of manufacturing are in Asia. So if you don't want to work with Asian countries because you're tariffing them, who exactly is going to build these things when no one has the expertise, because those kind of factories don't even exist outside of Asia? Like, how do you even build those in the first place? And then second of all, say they were to build it, they'd have to work with some Asian countries eventually. So those tariffs can't be like that forever, because if you want to build the infrastructure, you need the expertise, because people in America don't have the same expertise of building that kind of manufacturing that they do in Asia, because that's literally what they do in countries like China. That is their focus, manufacturing. So I don't even know how that's going to work. And then on top of that, if these things take, let's say, 5 to 10 or maybe even more years, which is more realistic on how it's going to take, these aren't going to be built in 6 months. What happens when a new president comes in that completely disagrees with this and walks some of this stuff back? So what happens if, as a company, you're halfway through building some stuff in the US, and then a new president comes in, and then it's no longer favorable to have your factory in the US? Now you've spent all this money. And that's why I believe a lot of companies aren't going to invest in the US, especially not in the short term, because there's too much uncertainty. Because Trump can just decide with a drop of a hat, the same way he's like, we're going to put tariffs. And then he's like, okay, there's a 90-day grace period. It's led to a loss of confidence in his administration. And so a lot of the advice that I've seen is just sit back and just wait and see what happens. So a lot of these companies are actually just waiting to see what happens. So this whole thing that, companies are going to scramble to start manufacturing in the US doesn't make sense when they've lost confidence in any sort of certainty with the administration. So that's something that confuses me at times.
Factory, from construction to legal compliance and everything in between. So Is the goal to bring back manufacturing, or is it to get countries to come to the bargaining table and give us more money? Because you can't have both. Second major contradiction, which many have pointed out, these tariffs are not going to be paid by these countries. They are going to be paid by businesses, private entities, attempting to import items from those countries into the US. And as a result, those businesses, because they are money-making ventures, are going to charge us more in order to not cut into their bottom line. And of course, the smaller the business, the greater they'll be hit by these tariffs because their margins and borrowing ability is much smaller than, say, a Fortune 500 company. So that boutique down the street that sells clothes made in Vietnam, or the corner store that sells imported Chinese food products that you can't find anywhere else, they're not going to turn to American-made goods to supply their inventory. They're going to raise prices to cover the tariffs, and then they're going to go out of business when people don't buy their stuff because it's more affordable at big box stores, or because these tariffs wiped out their retirement savings that they were living off of and they can't afford it anymore. And the third area of faulty logic is the idea that these tariffs are mitigating against currency manipulation and other anti-free trade practices that other countries are committing. Tariffs are the antithesis to free trade. They are regulations put in place to try to control the free market. Increasingly high tariffs are a very strange tactic for a party that has for decades been staunchly free trade. It doesn't make logical sense on so many fronts when these tariffs are analyzed from a typical Republican stance of free trade, laissez-faire economics, and smaller government with fewer regulations. And I think that's why we're seeing pushback even from the right, which we'll get into, but it is worth quickly examining how we got to these tariffs in order to understand them, because they cannot be understood through a traditional Republican lens. They have to be understood through the lens of the people behind the scenes pulling the strings to enact these tariffs, because Trump didn't come up with this by himself. Enter Peter Navarro, the chief architect behind Trump's tariff plan. Here's how the New York Times—
Oh no, not Peter Navarro and his dodgy ass books. Here we go.
Times describes him: a Rasputin-like China hawk who whispers anti-China musings in President Trump's ear. Love any opportunity to bring Rasputin into things, honestly. Navarro holds a PhD in economics from Harvard University, and honestly, I'm starting to believe Harvard will give those out to anyone, because good Lord, this guy is a kook. He's written 13 books and is incredibly pro-tariff, anti-China, and also generally written off by most economists as a fringe theorist at best. It was revealed over 6 years ago, though this information is once again making the media rounds, first published in an article from the Chronicle of Higher Education, that a lot of his most asinine theories are based on the musings of a fictional China expert that Navarro made up and cited to at least a dozen times in his books. That made-up person is named Ron Vera, a name which, in truly Voldemortian fashion, Navarro crafted by taking the letters of his own last name and rearranging them. Navarro, when rearranged, turns into Ron Vera. Again, this man has a PhD from Harvard. They must be giving doctorates out like candy over in Cambridge, Massachusetts. When asked to comment on the revelation, Navarro simply compared himself to Alfred Hitchcock, saying that the Ron Vera character was like a Hitchcockian cameo, and saying it was, quote, refreshing that someone finally figured out his little inside joke. In a text message to the New York Times, he wrote, quote, as Ron Vera might say, lighten up and have fun reading the books, which is actually insane for an academic to say about his academic nonfiction writing. Like, I need a psychologist to go into the White House and figure out just how many of Trump's advisors have personality disorders, because I imagine the number is not zero. I listened to an interview with Peter Navarro recently. It was on the New York Times podcast, The Daily, February 18th, titled A Conversation with the Architect of Trump's New Trade War, and was struck when he said that Trump was once asked about his favorite books about China, and Trump listed Navarro's book, The Coming China Wars, by name. Like Trump knows the name of a book off the top of his head and maybe even read it. Everything I've known about the man is turned up on its head. Turns out, though, probably not. In fact, that recent interview I listened to wasn't the first time Navarro had spun his yarn that Trump had read The Coming China Wars. Back in 2016, in an interview with KPBS San Diego, he told the same story, that in 2011, an LA Times reporter was trying to corner Trump in a gotcha moment, asking him what his favorite books on China are, but Trump showed that reporter when he listed off 15 books by name. But that story's been debunked, and it's unclear whether that interview with Trump ever even happened at all. Despite numerous reputable news sources mentioning it over the last nearly 15 years since it happened, there is no primary source evidence indicating that it actually ever did happen. The interviews that have actual evidence of ever happening, in which Trump is asked about his reading habits, show him either deflect.
Isn't it crazy that the media can just completely make up stories about and make up narratives about certain people to, improve like their messaging and stuff? That's so insane. Someone just made up a story of him just like recalling all these books and stuff. That's crazy.
Reflecting, saying he's too busy to read because he watches TV instead, or saying that his first favorite book is the Bible and his second favorite book is his own book, The Art of the Deal. I guarantee you he's never read either of them. In fact, according to recent reporting by MSNBC, Trump likely only knows Peter Navarro exists because his son-in-law, Jared Kushner, was looking for new economic advisors and did a search of books on Amazon and was impressed with the title of Peter Navarro's book, Death by China, and cold called Peter Navarro to see if he would step in as economic advisor. Like, he scrolled through Amazon book recommendations and was like, this guy'll do. As always, it's hard to exactly suss out.
That is just not the way that you pick an economic advisor. That is not how you choose an economic advisor.
The truth when relying on known compulsive liars. But the point is, Peter Navarro comes from dubious origins and espouses made up Looney Tunes economic theories backed up somehow by a PhD from Harvard, which means you can say pretty much anything and people are like, well, he went to Harvard, mustn't question. And it's one thing when it's a kooky professor publishing unfounded, miscited information in books nobody reads. It's another thing when that man, as the New York Times put it, is a Rasputin-like China hawk who whispers anti-China musings in President Trump's ear. And this Rasputin has even put a rift between Trump and his very favorite special sidekick, Elon Musk, who said the following in a video meeting with Italy's right-leaning League Party.
Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone between Europe.
Well, yes, because if you're a Republican, you're supposed to believe in free trade. So what Elon Musk is saying is literally, because normally when you have a free trade situation, it's now up to each economy to try and provide as much value as possible so they can be the ones exporting more than they import. That's what happens in a free trade system. But I digress.
And North America.
He also took a swipe at Navarro on Twitter, saying a PhD in econ from Harvard is a bad thing, not a good thing. Results in the ego divided by brains is greater than one problem.
Luke is saying, when are we going to connect this back? It's just more to have an understanding of how the tariffs came into place. First, we've already done the connection, because in fashion we know all of this. You can just relate it specifically to manufacturing and the specific regions that are manufactured, that are big manufacturing hubs in fashion. So let's say like Turkey or Vietnam, China, those kind of places. So I think it's very, very important, especially because China is one of the most important places for the fashion industry, not just for manufacturing, but also for customers and consumers, right? So everything about what's going on politically in China directly affects the fashion, like so directly affects the fashion industry. Like it's quite one-to-one.
Problem, meaning your ego becomes bigger than your smarts. And in the greatest evidence yet that Navarro is more of a showman than an economist, he made a sick comeback calling Elon a car salesman who's simply protecting his own interests. Nice. So we have a completely made up, incorrect, error-ridden mathematical formula based on nothing, determining reciprocal tariff rates that aren't even...
Also, Kay, you made a good point. The EU has for years been trying to get EVs from anywhere but China. That's great for Tesla. Which is very true, because obviously, like a lot of the main EV company in the UK is Tesla, and then we also get EVs from like Germany and Italy and stuff, and that's the thing. So like Trump is acting like all you people are just like China sympathizers and all this sort of stuff, but it's like most countries don't actually their relations with China is also like fishy, right? The EU doesn't have like fantastic relations with China themselves.
Reciprocal, likely orchestrated by a man who cites two made-up characters in his books, who's whispering in the ear of a megalomaniac authoritarian oligarch who couldn't care less whether any of us lives or dies. It's not quite the same, but Trump literally said he couldn't care less if auto prices increased as a result of these tariffs, and they are almost guaranteed to do so, hurting American manufacturers' bottom lines in the process and likely leading to layoffs and closures. Navarro's stated reasoning for why he is so dead set on tariffs is that he believes it will raise money for the government, which will then lead to lower taxes. So
Nathan is asking, is this good for fashion or a bad one? I think it just depends how you see it. So It's bad. I'll say why it's good and I'll say why it's bad. I'll kind of like give a balanced take on this one. So it's good in the sense that if a lot of these Asian manufacturing hubs are forced into having to pay these insane tariffs, it means that clothing becomes more expensive in general. And if clothing becomes more expensive, people that are buying these clothes, one, they're going to buy less clothing, which will lead to less overconsumption, and overconsumption will slow down, definitely. Also, it will kind of kill a lot of fast fashion because a lot of people, considering that everything will be expensive, won't be willing to pay loads of money on something that's going to disintegrate in a few wears. The reason why people are okay with buying Shein and Temu now is because they're like, okay, I know I'm only going to wear this dress once, but at least it only costs $4. So it's fine. I can like get rid of it. But even people that don't care about the environment or don't care about overconsumption will be forced into caring about it when your cheap dress now costs $75. So now you can't just think of it like, I'm only going to wear this once and throw it away, because that becomes significantly more expensive. It also means that a lot of companies will really struggle financially. It will lead to a lot of fashion companies folding. So that's definitely like a negative thing. It will mean that the cost for a lot of companies won't be able to stomach it. And if they have to put that cost onto consumers, the cost will be so high that consumers won't buy, leading these companies to folding. It's only really the big conglomerates that can afford, on the drop of a bucket, to be like, okay, let's move our manufacturing to regions that aren't tariffed as high in the US. So let's move it to, Turkey and other sort of regions like that. They are the only ones that have the infrastructure to do those kind of things. And even they won't really move stuff that quickly because it takes so long to move this sort of stuff. And then also they don't know if they need to, because Trump is all over the place with his policies. So even they have to wait. But in the meantime, they're bleeding money. A lot of them are bleeding money. So it's good and bad depending on how you see it. It's definitely bad for businesses, though. I think this will lead to a lot of fashion businesses suffering, and a lot of factories suffering, a lot of manufacturers suffering. So across the board, in that sense, it's bad. But in terms of like consumers and overconsumption and sustainability, I think it could be potentially a good thing for sure. Let me see what you guys are saying in the chat also. So why don't you fight against them? Why does the EU just lie down and take it? Like, is it just the way the EU is? The EU is not lying down and taking it. They were planning retaliatory tariffs, but they paused it because Trump obviously had a 90-day pause period. Also, they did actually put tariffs in place initially, which is why you had people like Harley Davidson fans complaining like, oh my God, my Harley Davidsons are going to be more expensive, because they are targeting the automotive industry in the US. So they're not just taking it. The EU definitely is not just taking it. That's not what's happening. No government is just taking it. I are deeply appreciating you bringing us together to learn and anchoring it in fashion. I'm gonna finish watching this live before my closing shift tonight. Good luck with your shift, Jay. Good luck with your shift. Good luck with your shift. I think infinite growth is definitely a bad thing. However, I just don't think it's possible. So I think the markets normally take care of themselves. So I've always complained about conglomerates having this idea that we're going to grow into the ether and we're never going to stop growing, which literally doesn't make sense, because mathematically you get to a point where every single customer on the planet, every single person on the planet is now one of your consumers. And then you actually physically cannot grow more than that. So there's always a cap on how much a company can grow. But a lot of these fashion conglomerates, their business model is based on the fact that they can continue growing, which doesn't actually make any sense. So no, I don't think infinite growth is a good thing, but I just think that the markets will always take care of themselves eventually. They always will. All this tariff woke nonsense on my Japanese proxy shipments gonna be more expensive. That's hilarious. That's so funny. But I'll show you guys actually what I was talking about in terms of the tariffs that the EU put on the automotive industry, just so that you guys are aware that the EU doesn't just take this sitting back. I think maybe in the US or maybe other places, it isn't covered in the media how a lot of the different countries are retaliating. But obviously, I live in a European country, so our news literally focuses on like the EU specifically and the UK and stuff. So yeah. So here we go. So here's an example, for example, via the Wall Street Journal. Let me just share this on the screen. 1 second. So Harley Davidson has said its products are afflicted by unfair trade policies, and if the European Union implements a 50% retaliatory tariff on its motorcycles in April, prices could reach astounding heights in the company's second largest market by sales. So the company's Road Glide model, which starts at 28K in the US, is already around 77K in Denmark, with the included 25% value added tax and a 150% luxury tax, and that could soar to 124K with the proposed EU tariff. The company is calling for its foreign rivals to face reciprocal duties when they export bikes to the US. Competitor brands should not be allowed to take advantage of low-cost manufacturing and preferential import duty when accessing the US market, Root said. So, like I said, there are many markets that are affected directly by the EU retaliating. Also, you need to take into account that all of these things are not in a vacuum. And I have to drive this point home, right? Just because if Trump's plans work, there is a net positive. There are so many industries that will suffer. And if you work in any of those specific industries, you will lose your jobs. You will have no job. The industries will tank. A lot of those industries will cease to exist, maybe, if it's really, really that bad in terms of their ability to trade and, you know, have raw materials to even make those goods in the first place. So it's not, this thing is not perfectly balanced the way that some people think it's going to be. That's not really how these things work, to be honest. Let me see what you guys are saying in the chat. Come on, guys, like the page. 75 likes and well, 150 listeners. Yes, please, guys. Please do give me a like. Please do give me a like. Literally, my biggest concern at the moment is if my buyer orders are going to get taxed now. I mean, they definitely will. So while there's a 90-day period, buy everything you need to buy, because once the tariffs come back into effect, good luck. Everything's going to be so expensive. So expensive. So the Bentley you guys produce, and what else? So we actually produce a lot. So not only do we produce, of course, like Land Rovers and Bentleys and blah 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 blah, we produce, and that's just in the UK. The EU produces a lot of the like German cars. They produce the raw materials for a lot of the German cars. So we're talking Audi, Mercedes, that sort of stuff. A lot of the motorcycles are definitely produced there. And also a lot of the motorcycling market is Asian based. So you look at, or just automotive industry, you look at the likes of Toyota, you look at the likes of Suzuki, Kawasaki, like all these companies, right? These are all in these are all some of the biggest manufacturers of automotives across the world. So the automotive industry specifically, which is why I focus on that industry, because that is what the EU is focusing on, they can really hurt the US automotive industry by imposing crazy tariffs. Like they can severely damage the automotive industry. Like the automotive industry in the US will really, really suffer. So the EU is not capping. They're not capping at all. They produce a lot of automotives. And it's not just that they produce the cars or the motorcycles, it's that they produce the raw materials that are used to make these. Also, you need to remember, apart from that, when you think of defense, a lot of the, like, let's say military vehicles, military weapons, military planes are also produced in European countries. So that's also another thing where they can hurt the US economy. So going back to it once again, all the other countries are not just lying down and taking it at all. That's not what is happening. It's not what's happening at all. But anyway, let's go back to the video, guys. Let's go back to the video.
The government will levy higher tariffs. Businesses will pay them to import their goods. The government will have more money, so they'll need to tax the people less. The problem that most economists who actually have a toe in reality point out is that increased tariffs have consequences, like retaliatory tariffs from other countries, like increased prices on everyday goods, like hurting American businesses. And those consequences will slow the economy down. And they will be felt the most by middle and lower income Americans, because a billionaire doesn't know what an egg costs, let alone notice when egg prices change. A billionaire can buy whatever car they want without noticing the price.
Also, VJ is saying that the EU makes airplane engines. Exactly. Like even like Bentley, for example, makes a lot of engines for planes, but there are other companies that are specifically focused on like the military plane engines and the consumer plane engines too. So all of that is all produced across the EU and regions in Asia. So yeah, they're not. It's a misconception that they're sitting down and taking it. Maybe the media portrays it that way because they're trying to push, I guess, an agenda that they're just trying to make the tariffs seem overly positive in the US and not really talking about any of the drawbacks or giving any sort of balanced take on the whole thing, but that's not reality.
Multimillionaires will still buy their Switch 2 and their new car and their imported washing machines and their shoes made in Italy and their organic produce from Mexico, and they won't notice a thing. Meanwhile, lower income Americans will not only feel the squeeze at the grocery store and anytime they need a new pair of shoes, they'll also have a harder time even finding those things to begin with, because there will be less of them in the market due to the slowing economy. And those that do exist will have higher prices. And then on that magical fairy tale day that Navarro promises, when the tax cuts magically rain down upon us, they will mostly benefit the richest Americans who already don't pay their fair share. And the rest of us, if there ever even is a tax cut, which is definitely not a given outcome of increased tariffs, might see a modest drop in the taxes we pay. But that would be after literal years of being pummeled with supply chain issues and overpriced goods due to tariffs. The only people who benefit from this no pain, no gain approach that Trump is advocating for are the rich, who feel the pricing.
Yep. It's so important to mention that because it's so important to mention this because something that Trump has said in one of his recent statements, he said, he was like, oh, no pain, no gain. It's going to be a lot of pain now for a lot of prosperity later. But who can afford in the meantime to just suffer because, well, it's going to be better soon? In the meantime, people are going to be bleeding. They're going to be going into credit card debt. The debt isn't just going to go away when prosperity comes. Like, it only favors ultra rich people that can afford to be in a state where the economy is messed up, prices of goods are really high. Who the hell can afford that apart from someone who's really, really rich? That's another thing that I find weird, because it's like, who can survive in those conditions in the meantime?
Increases less and who get the most out of tax cuts. And even they are feeling the squeeze right now. Last week, the Dow Jones Industrial Average fell by over 1,500 points 2 days in a row. That's the first time that has ever happened. The market overall has seen the greatest dip it's seen since March 2020 when the pandemic hit. The S&P 500 is nearing bear market territory, meaning it's lost almost 20% since its peak. Last week alone, the S&P 500 fell by nearly 6% in 1 day. 6% is when the circuit breaker kicks in and pauses all trading for 15 minutes to protect against a complete market free fall. Earlier today, amid unsubstantiated rumors that Trump was going to pause the tariffs on Wednesday, the markets jumped back up, only to crash back down when the administration said on Twitter that it was all fake news. The extreme volatility is sending investors into an even greater tailspin, sowing doubt in the stability and strength of this economy. Worldwide, markets everywhere have been in free fall, from Europe to Japan. Germany's index fell into near bear market territory. Hong Kong's fell more than 13%. Shanghai's by over 8%. Japan's by nearly 8%. The volatility index, which measures market volatility, so higher is worse, is the highest it's been since the pandemic. One analyst described it to the BBC as a bloodbath. Goldman Sachs raised its forecast from 35% to a 45% chance the U.S. will fall into a recession in the next 12 months. JP Morgan estimates a 60% chance of a U.S. and global recession. The world's richest billionaires lost $200 billion in a single day last week.
Of course, since a lot of them have gained the money back, obviously, since Trump paused it. So obviously that update needs to be mentioned. But once again, with how many people are saying that there's potential to have a recession, who the hell can afford a recession if you're not rich? Like, can someone answer that question? So all the people that are supporting this, do you have the money to survive a recession? Do you, watching this, have the money to survive through a global recession? Do you guys have the savings for that? Because a lot of people are supporting this, like, yeah, we're going to have prosperity. I would love to see if these same people can afford to live during a recession. That's what I want to see.
Mark Zuckerberg alone lost $18 billion in one day. This has led to rare backlash by billionaires aimed at the Trump administration. Billionaire investor Bill Ackman took to Twitter to lambast the president, saying, quote, "The president is losing the confidence of business leaders around the globe," and adding, quote, "We are heading for a self-induced economic nuclear winter, and we should start hunkering down," which says a lot because billionaires literally have bunkers in which to hunker. Ackman added in his post, quote, "This is not what we voted for." And this echoes the overarching Republican response to these tariffs as well, from rank and file voters to members of Congress. One user on conservative subreddit named Harry Eyeballs put it well when he said, quote, "I get the sense I'm not being told the truth." Or user Comprehensive Town 919 on Republican subreddit saying, "I need someone to help me understand what exactly these tariffs are going to help us on, because right now, all I'm seeing is the prices for simple everyday living items continuing to go up. This is not what I voted for, and I want to know why this is happening." With user Quality responding, "This was Trump's main economic policy proposal during the 2024 election campaign, ... And another user responding, "This is what you voted for." And this is the Republican subreddit. Its profile picture is literally of Donald Trump's face. TikTok user MostFace2, who's not conservative but has been apparently following conservative subreddit since 2014, noted this is a huge shift in rhetoric on this subreddit.
Lately, the comments on there are nothing like I have ever seen. I've never seen it be this consistently anti-Trump with flared users, legit representatives of that community. This bubble that has been ironclad for a long time, for like a decade, is starting to pop. It's a change I have not seen in over 10 years.
Even Republicans in Congress are showing rifts in their typically lockstep support of Trump's agenda. Senator Rand Paul of Kentucky told reporters, quote, "When President William McKinley most famously put tariffs on in 1890, they lost 50%.
Guys, I'm wearing a ripped cap. It's a recession indicator. Get to know. Get your indie sleeves, recession indicator clothes ready, guys. It's coming.
To their seats in the next election. When Smoot and Hawley put on their tariff in the early 1930s, we lost the House and the Senate for 60 years. So they're not only bad economically, they're bad politically. Perhaps most notably, a new bill is gaining rare bipartisan support from the likes of Mitch McConnell and Amy Klobuchar. The bill would limit the president's power to impose new tariffs, and instead the president would have to obtain congressional approval. Congress would also retain the power to end any tariff at any time. And this isn't a revolutionary idea. The Constitution literally gives the power to tax and tariff to the Congress. But over the centuries, Congress has slowly...
Yeah, William Clark, you're right. I think a lot of people don't actually know what they're voting for. So many people just vote based on some tiny emotional thing rather than actually reading and looking at all the policies that the person that they are voting for is, advocating for. It's quite sad how many people don't, look deeply into the policy, where people who consider themselves Republicans are like, this is not what I voted for. But that's what you voted for. Trump literally talks about this all the time. Like, what? Did these people not read any of the policies that the presidents are actually trying to advocate for? It's crazy.
Passed laws offloading that duty onto the president. However, many Republicans are not jumping on board with the new bill, instead deciding to tentatively support Trump, with Senate Majority Leader John Thune saying he's giving Trump the benefit of the doubt. As Democratic Senator Brian Schatz put it, "Mostly everyone hates this. They are just too afraid of the Mad King at the moment." And that about sums it up. And while we can look at reactions on the right and left, the volatility of the market and economic forecasts to try to see what's going to happen, the reality is that nobody really knows. No one's done something like this before, not to this extent, with this little support, with this little backing in reality or how economics works, with this little care for the consequences or the fallout. Europe is talking about enacting more retaliatory tariffs. China
also, in a recession, by the way, for people that don't know, it is a wealth distribution. I hope you know that, because one thing I will say about recessions, from what I've seen, this happened during COVID as well, is rich people own the companies that provide necessities, and everyone has to buy necessities, even when you have no money. So even if you are poor, to survive, you need to eat. In winter, to survive, you need heating. You need these things. Who are the people that provide electricity, gas, food? Who owns like Walmart? Who owns the grocery stores that we see? So people who don't have a lot of money in a recession will have to go into any sort of credit to buy these necessities. And that money is going into the pockets of the people that provide these necessities, which are rich people. So all that a recession is going to do is just widen the class divide and the class gap between the middle class, the working class, and then obviously the rich people in society, right? Which is why I find it weird that most people advocate for stuff like this, because I mean, most people voted for Trump. That's why he won. So it's confusing because it's like most people gain to lose from it.
China already has. Rumors that the tariffs will be postponed on Wednesday have already come and gone and will probably come again. He may pause them on Wednesday. He's done it before. The result, whether the tariffs stick or not, is increased global economic uncertainty in the face of all of this volatility. The result is further alienating countries that were once our allies, relationships that will take decades to fix, long after Trump is gloriously cold and dead in the ground. Our 401ks have already lost value and will likely lose some more, though it's unclear how long that will last. Is it a shorter blip, like the market response to the pandemic in 2020, or is it a protracted recession, the globalization bubble bursting, something closer to 2008, which some people are still recovering from? Yeah, still. There are genuine, real consequences happening right now, and there are disparate and sometimes unforeseeable consequences that will come, likely for all of us, in different ways. Time will tell how deep this downturn goes, but it is true that all of us, regardless of political ideology, are going to be uncomfortable, either from literal economic squeeze or just general economic uncertainty for a while. Okay, here's the part of the episode where I usually tell you what to do about it. And I'm not an economic advisor, but I do have a type A sister who taught me about personal finance from a young age. And I've also been doing a lot of thinking for the last week because I took it off and it was not restful. I was just spiraling. So happy to be back. Here's what I'm doing and thinking about. Recessions have happened. World wars have happened. Pandemics have happened multiple times. Through it all, despite incredible volatility and economic hardship, which
Nathan, I don't think you were here earlier. I'm not sure if you were here earlier, but I talked about this already. That the way that the US deems other countries charging tax on them, it doesn't work that way. That's not how trade deficits work. Like, that's not how it works. Normally, so I'll put it this way. The reason why a country can get away with putting tariffs on the US, that the US didn't put tariffs back on it, yet the US is still importing more from that country with higher tariffs than the US sends to them, can only happen because the US has something to gain from it. And you can see that across so many businesses, whether that's, companies taking advantage of the low labor cost in regions in Asia, or the manufacturing expertise in China and stuff like that. So that's why they can get away with it. It's this simplistic view of they tax us, so we tax them the thing back, without taking into account what the industries need, where these things are produced, who has the expertise to produce these things, why companies go to these countries instead of producing the infrastructure themselves in their own home countries. It removes any of that nuance. So it's too simplistic to be like, they charge us more in tariffs than we charge them, let's balance it. That's not how these things work.
Which I do not mean to minimize, but this is the truth. Through it all, the economy has continued intact, meaning the stock market still exists. It bounces back. The downturns have been temporary. This is not a time to panic and pull all your money from the stock market if you have any in there to begin with. If you have the ability to make extra cash, a side hustle, a passion project, and you can squirrel away a few extra dollars, now's the time to do that. I realize that's not possible for everyone. I'm just saying, if that's within your capability, now would be the time to do it. Make sure you have savings to cover your bills for at least 6 to 9 months. Again, I know that's not a reality for many people. So many people cannot weather a $500 emergency right now in this country, let alone save up 6 months of expenses. If you do have that emergency savings in place, maybe you top that up. So it's closer to 9 months than 6 months. And then you squirrel away what you can in the stock market as well. And I know there's no way to ethically invest in the stock market because there's no ethical consumption under capitalism, et cetera. I personally do it because you got to play the game to survive. And I'm not interested in being destitute in my...
I mean, I'm going to end the video there, but I mean, investing in the stock market, especially if you don't have the kind of information that, let's say, banks have, good luck trying to like beat the banks and stuff. Because I'm sure so many people that worked in the banks have like some, especially in the US, have some connections to Trump. And so they would have known that he had a pause date, which is why they made loads of money when he announced it. But they are privy to that information. The everyday person doesn't, it's like gambling because you don't really know what's going to happen. You don't know what's changing the markets, and you don't have a lot of the information available that like people that work in banks and stuff do. So yeah, but anyway, it was a good time to buy the dips though. I will say that it is insider trading, of course it is, but loads of people insider trade. They just aren't caught. Some people do it in the open, like what Trump did, but and Trump is going to get away with it. But yeah, that is insider trading, which is illegal, but that's what they do though. That's literally what they do. But anyway, this was fun talking about how the update on the Trump tariffs and how exactly that's going to affect the fashion industry. But let me see what you guys are saying, and then I will take my leave. I might do another stream today. I might move it to tomorrow. Who knows? But let me see what you guys are saying before I disappear. Let's see. She means buying index funds. Stock slid again anyway. I mean, even index funds, like, especially with how volatile the market is now, I wouldn't know about the index funds investments right now where Trump can do anything on a drop of a bucket. I would say, actually, let me not say that because I'm not supposed to give financial advice. Let me not do that. That's not my bag. Americans put too much of their savings on stocks. Yeah, because wasn't a big conversation around when this was announced. People were talking about how a lot of people's 401ks are really affected by these tariffs because a lot of people's 401ks are kind of in stocks, in the form of stock. So if the stocks go down, especially the S&P 500, which is the index fund that I think most people use, right? So it really affected people's retirement plans. People's retirements were being ethered. Not great, not good. So I guess we shouldn't make kids. I mean, this is a big reason that there's a big conversation around why people aren't having as many kids as they did before. This is definitely one of it because the economic situation right now is so dire. Like this is literally like Charles Dickens level of like what are we leading to? It's honestly getting to that point. It's really, really crazy. It's really crazy. If you could choose 3 specific textiles to wear forever, what would you choose? Wool, because wool has temperature regulating properties. So I couldn't even pick 3, but if there was only one fabric I could wear for the rest of my life, it would be wool because wool temperature regulating properties. If I had to do physical activity, I'll just do it topless because obviously wool is not like crazy moisture wicking, but you could just do that topless. But I think wool to me is the best like fabric personally. Cotton is like good, but not as good as wool in my opinion, especially in terms of dealing with different climates and different extreme temperatures. Oh my God, Trump should pay a tariff for any Europeans he slept with. Jesus, you guys are insane. Crazy. Yeah, it is also antibacterial. That's facts. No, I don't have a fashion line. I have. Do you know what's funny? So I make a lot of garments for myself. I feel like I have a brand, but it's a personal brand. I just make clothes for myself. Maybe from time to time, I might do like capsule collections, maybe, because I do think that some of the stuff I design for myself is quite cool, and maybe people will be interested in buying stuff like that. But that won't be for any time soon, especially with these tariffs. Jeez, we have to wait. We have to wait on that, because I do not have a lot of money. So the last thing I want is to be paying some 40% tariffs on top of what I'm creating. So yeah. Do a recap on a Prada topic. So you can watch the stream back. You can watch the stream back. Otherwise, I'll just be saying the same thing over and over again. So once I end the stream, you can watch it back. Do you just pay loads to get bespoke pieces made for yourself? That's awesome if so. So yes and no. So I obviously know how to make patterns myself. Like I used to be a pattern maker, so I make my own patterns, not all the time, but sometimes. And then I know how to hand sew. I don't know how to use a sewing machine. That's something that I definitely need to learn, but I do know how to hand sew most things. It just takes forever. So some things I actually just make myself. Like I make the pattern, I buy the fabric, I hand sew it myself. Sometimes it's a favor thing. So I do favors for my designer friends and then they make the clothes for me as a favor. So that's another way that I do it. But yeah, I'm not like super rich or anything, so I couldn't afford to just like have things made like bespoke by some like crazy Savile Row tailor or something. Hopefully one day, maybe, but that's how I do it. And once I learn how to use a sewing machine, guys, oh my god, I'm going to go crazy. I'm going to save so much time. So much time. Trump is robbing us on the Fashion Roadman collection. That's funny. The shift to a consumer culture came out of that transition because it became more profitable to buy externally, because the dollar could buy more than it cost to make the money. Exactly. You're talking about like the trade deficit and stuff like that. Back to when you worked as a pattern maker, or you also the tech designer, or was that assigned to someone else? That was assigned to someone else. I was just mainly patterns. And it was old school patterns, because this was like the company that I worked for, the brand that I worked for didn't do digital patterns and they didn't use Clo 3D and stuff like that. So it's like the old school way of like measuring each panel, cutting out each panel, and then putting those panels on hangers and using that as our archive and reference for our panels. Whereas now people just have them saved as like files. That's crazy to me. I do need to learn how to use Clo 3D too, but the thing is, I'm not a designer, so I'm learning all these things at my own pace. If I was a designer, then obviously I would have learned all these things by now, because my philosophy as a designer, like if I was one, is to learn all the skills. I think if you make clothing or you have a brand and you don't have these skills, you could make a successful brand, but it limits you skill-wise. So if I was a designer or I had a brand, in 6 months to a year, I would learn all these skills to a good level. Then it would just be refining from there. So yeah. Yeah, learning the machine is one thing. Being good good at sewing is another. Yeah, the thing about sewing, which is why I'm so good at it, I've been hand sewing since I was like, well, I started it in secondary school, so I was like 13, around that age. I used to, people that went to my old school, I know there's some people from my friends from like secondary school that follow my YouTube and stuff, and they comment sometimes. They will tell you, I used to, so at the time, skinny jeans were like a thing. So I used to customize people's school trousers and make them skinny, and people used to pay me to do that in school. So that was when I started hand sewing. So people would have like baggy trousers. They'll be like, oh, can you make it skinny? They'll give it to me. I would alter the trousers and then they would pay me. So that was literally one of the jobs that I had when I was in school. That's how I used to buy food and stuff when I was in school. And people that went to school with me will tell you that. I don't know if any of them are in the chat right now, but yeah, that was something I used to do from when I was like 13, 14. So I've been doing it for a really long time. I am about to charge us $400 for a custom t-shirt. That's funny. Dr. G says same thing in Jamaica with the pants. Yeah, that was a serious hustle. That was a serious hustle. Like being the alterations guy. That was a serious hustle. It used to have people laugh at baggy pants to motivate sale. That is a crazy tactic. I should have done this. I should have hired people to make fun of people for wearing baggy trousers so that they would be peer pressured into, you know, buying into my services. That's funny. That's hilarious. But anyway, guys, this was fun. I'll see you guys in the next stream. Please follow the Twitch page. Please follow the Twitch page because you'll be notified when I go live. The Twitch notifications are way better. I always say that it's also my crafty way of getting you to follow me on Twitch. I'm quite open about that. But yes, please follow me on Twitch and I'll see you guys in the next stream.